Hello everyone and welcome back to another video. Today's video is going to be focusing on the problems and limitations with gold. Now, I think gold is a wise choice for any investor, anyone that wants to protect and store their money in a valuable, finite and scarce asset. But today's video is going to focus strictly on the limitations and the problems that I think there is with gold. So let's get straight into it. So making sure the gold is genuine, so buying from a reputable source. Making sure it's secure, and we'll come on to that a little bit later as well. So the security is really important, but also the exit strategy. So if you're buying gold, think about how you're going to sell it. And one of the things that I find now, especially in the last few years, is the rise in collectibles. Now, collectibles, they can be good. A lot of people like them. I used to buy collectibles. I thought they were quite cool at the time. The issue is with the exit strategy of it. If you're holding it because you like it, and it's not for the investment, then, that's on you. You do you. But if you're buying, let's say, a fractional sovereign from a private limited company, and you're paying much more than the intrinsic value, and they try and sell you a marketing ploy telling you it's limited mintage and you have to get in now before they all sell out, don't listen to it. It's just a marketing ploy to try and get you into buying it. And 9 times out of 10, it's not a wise choice, because the sovereigns you really buy, unless it's a really rare one, a numismatic piece, you want it as close to the spot price as possible. Unless you like nicer condition sovereigns, which are, I prefer nicer condition sovereigns, so I'll pay a little bit more. But it's all different it's all different circumstances for people. So the point I'm trying to make is collectibles, they will achieve higher prices only really if you sell through privately, or if they're really highly desirable, then you may be able to get much more than its spot value. But just thinking about the exit strategy on collectible gold, if you go with the anticipation that you're going to take it to a dealer, they'll likely pay you spot unless they're specialists. So it's just something to think about. Numismatic coins, collectible coins, there's a market for it, definitely. But there are trends, and when the trend is not there for your specific gold bar that you've bought with some licensed product on it, it might not be as popular in a few years' time than it is when you buy it today. So they might only pay you spot and you actually pay a lot more, and there could be a stagnation in the price. So something to think about there. Another thing is, of course, there's no income generation for gold. So there's no dividends, there's no yield. And that can be a problem for people that want that cash flow. Now, with gold, that's not the point of gold. It's not to make you yield or dividends. It's a store of value. It's proven. It's one of the things that has been around for 5,000 years that we still value from then today. We've seen it through central bank demand. We've seen it through the gold price, nearly, I think it's £3,200 making this video, and £41 silver is insane. So it's still seen as a valuable metal. It works off supply and demand. If the demand is there, the price rises. So the demand of gold and silver is very high, but it depends on what you're looking to get out of it. Now, I'm a firm believer of gold because I believe gold is scarce, it's finite, and the price reflection of gold going up is not necessarily it becoming much more valuable. It's the currency debasement, the currency becoming weaker. So that is something to think about. Is it really the price of gold going up, or is it the pound going down? Another third thing that I would suggest as well, a problem or a limitation with gold, is of course storage and security. Depending on how much you have or how creative you feel, security is going to be one of the main 3 that I spoke about. So making sure it's genuine, making sure it's secure, and making sure that you have an exit strategy. So security, there are things like vaults. So if you go to a reputable dealer in the UK, I won't name any, but I'm sure if you type in bullion dealer, you can find a variation of dealers out there, and you choose which one you want to use. Most of the bigger ones will have their own vault service. Now, there's a conception that people will say, if you don't hold it, you don't own it. And to a degree, I do get it, but you're limiting yourself over options. But I've never heard anyone having things stolen from a vaulting service and I don't think it's something you really have to worry about. And of course, it's going to be insured anyway. So you can hold it, you can own it, but you run the risk of security at home. Now, holding it in a vault, of course, you have that if something goes wrong, you have that company to go to. If something goes wrong, let's say if unfortunately things are stolen from you, if you're traveling to and from, or if your house is entered and people take your gold and silver, or they find it or whatnot, then it's not necessarily, it's probably unlikely that you're going to get it back. And that's just the reality of it. So it's great that you hold your own silver and gold. And if you do hold it in your own home, then I'm not going to tell you where you should secure it. There are lots of options out there when it comes to safes, when it comes to being creative of where you store it. I'll leave that with you, because whatever answer I give, it's going to be different for everyone. And frankly, the greatest hiding place for you is only you, perhaps one other person should know. So something to think about when it comes to storage and security. The fees with vaulting is going to be the limitation and problem. Over time, if you hold it in the short term, it might not be very much. And some dealers offer a service that means that you get a certain amount of time that's going to be free storage. Now, generally, dealers will say that if you're holding gold, you look to that 3 to 5 years minimum, really. But some, for whatever reason, you hold gold, you can liquidate it. I find it useful as a bit of savings. If I want to liquidate some gold bars, for example, if I have got a payment coming up, then perhaps I can just liquidate it. And it could be in the short term, potentially. It depends on the person. But generally speaking, long-term investing precious metals is a longer-term viewpoint when it comes to investing in the metals. So the storage costs over time can be quite expensive, potentially. It depends on how much you own, but just have a look and explore the services that are available, the vaulting services, the dealers. If you're buying from reputable sources, they'll offer vaulting options. Just see what the prices are, see how that reflects in the return. Historical performance doesn't necessarily determine future results. So although gold has gone up 30-40% in the last year, it's not necessarily going to be the case that it's going to go 30, 40, 50, 60% next year. Really depends on that supply and demand. Although I think gold will go up long term, I don't know what's going to happen in the short term, because it really depends on things that are completely out of my control. And anyone that really does say that they know for certain what's going to happen with the gold price in the short term, they don't know. So in the long term, I think so, because of course, currency debasement, we have more pounds chasing the, maybe not the same amount of gold, because gold is still mined, but it's mined. There's only limited quantities and it's a lot smaller. If we look over the course of history, you know, the amount of gold that you can hold will fit into Olympic-sized swimming pools, is the famous saying. So gold, although more and more will be produced, is of limited quantities. So that's something to think about. Of course, the volatility and timing of the market. If you're buying today, you're buying technically at an all-time high, and that is seen as a don't do for many people. And I'm not saying that you should buy, it depends on your circumstances. But I will give you an example. A few years ago, I started buying gold at all-time highs pretty much then. And I would have people say, don't buy it, what are you doing, that sort of thing. And it's doubled, I think, in that time. So it depends on how much you're putting in it. It depends on your time horizon. If it's for the short term, then it might just be better holding cash. But if you want to have a little bit of cash and a little bit of gold, then you can do that. If you want to put it all in gold and you're looking at a 3 to 5 year minimum, then, you know, it could be an option. So just looking at that volatility, because if you buy a Britannia of £3,000 and you look in the next day and it goes down 10% and you sell, what's the point in doing it? I think having that knowledge of conviction, understanding the market of gold, understanding the reason why you're doing it is much more important than just buying gold blindly and not understanding what you're actually investing in. Gold is, of course, a monetary metal. There isn't anyone that controls all the gold. You know, there are people that buy it, there are people that hold it. The price could change dependent on the market, but it's not a company. And that's the one thing I like about gold. So the upside in stable markets, you might be more attracted to other options, maybe real estate, maybe stocks and shares or something. And gold can be seen as limiting that potentially. And that's why people will say having gold, 5 to 10% of gold in your portfolio is generally seen as preserving that rather than multiplying it. And another thing as well, of course, if you're into the environment, then you've got the ethical and environmental issues when it comes to mining gold. Of course, a lot of mining, a lot of pollution, a lot of deforestation is involved. So if you are, perhaps more conscious of that, that could be a problem for you. So if I was to summarize, I've given you a variety of different points over what I think are the problems and limitations with gold. I did try and condense it as much as possible, but if you have stayed until the end, thank you so much. And if you enjoyed this content, then please leave it a like. But gold is seen as a long-term store of value. It's been seen as a monetary metal, I think, since the Romans. So it won't produce anything. It's not a productive asset, but it will store its value, and it has that proven record of it. And it's that wealth preservation, which is the reason why people buy gold, not necessarily to make money, but it will keep that money from the inevitability of inflation, the inevitability of currency debasement, because it's a scarce asset. And we've seen, especially in the last year or so, it's still high in demand. And, I wouldn't be surprised if there's going to be a shortage of gold in the future. But I hope you enjoyed that. And if there was anything I missed out or left, or anything you want to address or ask me, then please let me know in the comments. And I want to thank you for listening. Take care. See you in the next one.